This probably isn't the way to maximize the mathematical expectation of your future earnings. If you want to do that, you should probably go do PE or investment banking.
Yeah, Dan and I have talked a few times about the difference between internal and external goods. External goods tending to be press releases, money, status, living in Manhattan. Those are not things that one should expect to come from search or ETA, but the internal goods of putting out fires, watching the impact you can have on your employees and their families, those goods are often the ones that folks in this community are seeking.
If you couldn't tell, Matthew and I probably spend more time talking about philosophy than financial models.
Search Party is sponsored by Avid Bank, Boulay, Mayer Brown, and Plexus Capital. The lead sponsor is Next Coast Legacy. Hello and welcome to Search Party. I'm your host, David Snow. And today we're joined by Daniel Lazier and Matthew Conley. They are co-presidents of the Kellogg School of Management Entrepreneurship through Acquisition Club. Guys, how you doing? Thanks for being on Search Party today.
Thanks for having us, David.
We're going to talk about the career path that you two and about 145 other students at the Kellogg School of Management are pursuing, which is the entrepreneurship through acquisition route. That is one might say, a non-traditional path after business school. You're not going to a big consulting firm. You're not going to an investment bank. You're not going to a corporation. You are interested in looking for and acquiring your own typically lower middle market business, partnering with investors, becoming the CEO or the co-CEO of that business, and then running it as well as you can and sharing success with all of your partners. It is gaining a lot of popularity, and the popularity can be seen, I think, most clearly in these clubs within business schools. What should people know about the Kellogg ETA Club? What's it trying to do? Why does it exist?
Yeah, so the ETA Club is, it doesn't feel like it, but it's a newer club at Kellogg. It spun out of the private equity club a few years ago. And it really started in response to the amount of investor interest and student interest in search. The early stages of the club was primarily operating with the goal of hosting investors on campus and introducing them to students that were considering search. As time has gone on, we have tried to orient it more toward producing successful outcomes for potential future searchers, and also teaching folks what they need to know about making a decision to either search or not to search. The self-reflection required to understand if now is the right time, and if your personality and life goals align with search.
I love how the private equity club had its own spin out. That just seems so perfect. Daniel, help us understand the interest in the ETA Club at Kellogg, which is of course reflective of generally the huge uptick of interest around the country and in parts of the world for ETA generally. What have you seen at Kellogg?
In a typical class like Kellogg, where there's, 500 students, I think there's at least a couple hundred to whom this seems like a very appealing path to at least investigate. Over time, we kind of identify this dynamic of like almost concentric rings, where that outermost ring is we'd call it search curious, which again characterizes at least a couple hundred folks at Kellogg. And then the more serious folks, that might be 40 to 50. And then in a given year, there might be 10 or more folks from Kellogg that pursue an entrepreneurial path that doesn't look like startups. Maybe it's independent sponsor, maybe it's self-funded search. Majority of them are traditional search.
What kind of person have you found is attracted to the ETA path? Is there a commonality among the classmates that sort of suggests why they might have decided to become ETA curious?
In addition to the concentric circles Dan mentioned, we also often talk about the spectrum of similar career paths, with one end being CXO or CEO in training programs, and the other end being a self-funded search, which we view as the least structured along that spectrum. Somewhere in the middle is traditional search. The personalities that get attracted to our club and ETA generally, on one end, we have folks who are really interested in the philosophy of controlling their own destiny and being able to determine whether or not they'll be successful without having heavy influence from a boss or a management team that you're ultimately supporting, but more so having the buck stop with you. And I've found that the extremeness in that feeling is, if that's a word, is really what helps people decide where they'll fall on that spectrum.
One kind of common thread that I think ties that whole continuum together is these folks are generally motivated by something very different from money. That's part of that step of going from search curious to I'm a search hardo, I'm a search maniac. I'm definitely going to search after Kellogg. If I had to put it in a word, it would probably be impact. That's a real sort of motivating touchstone for those of us who decide to go down the path of entrepreneurship, namely entrepreneurship through acquisition.
I totally agree. And I think one of the things we hear a lot of operators who we bring to campus say is running a small to medium-sized business is a rare opportunity to see your fingerprints all over something. And there are implications there. If you want to do good and serve the stakeholders of your business, there is no better way than to have your hands all over the whole business. That's very hard to do at a scaled company. It's very hard to do in a services industry, whether it's consulting or investment banking, just because the number of people you can impact on a daily basis, annual basis, is much lower.
I guess we hope it's a goal of ours as leaders of a club for people to come away from Kellogg with the understanding that this probably isn't the way to maximize the mathematical expectation of your future earnings. If you want to do that, you should probably go do PE or investment banking. If you're motivated by that other thing, we think this is a really, really productive path to go achieve your goals.
Yeah, Dan and I have talked a few times about the difference between internal and external goods. External goods tending to be press releases, money, status, living in Manhattan. Those are not things that one should expect to come from search or ETA, but the internal goods of putting out fires, watching the impact you can have on your employees and their families, those goods are often the ones that folks in this community are seeking.
If you couldn't tell, Matthew and I probably spend more time talking about philosophy than financial models. I don't know if that's a Kellogg archetype or a search archetype, but take from that what you will.
Well, on that note, I'd love to hear the executive summary from each of you on what led you to the ETA path. What about it appealed to you? Maybe we could start with Matthew.
This was something that actually began to appeal to me way back in high school. I was editor-in-chief of my high school newspaper. And while that does not sound anything like ETA, it truly was the closest I've been to running a business. We had a staff of more than 50. We produced the paper on a monthly basis, shockingly similar to closing the books. And when I wrapped up with that role and went off to college, I wanted to find a way to solve for making that kind of lifestyle my full-time job. I knew investment banking was a good starter career to get a broad understanding of business, finance, accounting, transactions. I moved on to operationally focused private equity, where I got to dip my toes in the water and see what it was like to get involved in the management of a business that had been acquired by a financial sponsor. And my time doing that made me realize that I enjoyed operating businesses much more than finding and investing in them. And when I got to Kellogg and learned about the breadth of the search ecosystem and how helpful the investors are and how round-elbowed the community is, I just realized that was my calling. This was the perfect time and opportunity to find a way to run a small business.
I grew up working in my family's business, which my family has a couple of manufacturing businesses, and very unglamorous, but really got to understand and learn the heart pulse of the business through those block and tackle tasks. In the background, my dad and his business partner had been investing the surplus cash flow from the businesses into search funds, probably one of the top 10 by volume search fund investors. Their names are Tom Cassett, David Lazier, TD Investments, probably had more exposure to that than your average bear. Straight out of college, joined a tiny little startup, and then later went on to go work for another startup that was on a much, much greater trajectory. By the time it was a public company, it started to feel like a job and less like a vocation. So for that reason, returned back to the family business, I found myself continually drawn to the search fund side of what my dad and his partner were doing. I straight away noticed that the board members, the investors, the other members of the community had this completely different posture and this completely different wiring. This was just a completely different level of congeniality, direct and intentional mentorship that just sort of had this vibe that's really when I convinced myself that this was the next best path for me.
Can you talk about what is available to you and other ETA curious students at Kellogg by way of resources, classes, network, activities? What are the things that make it an advantage to go to Kellogg and be focused on ETA over just, looking it up on ChatGPT and trying to figure out yourself?
Well, first of all, looking it up on ChatGPT is probably not a bad start. What is it exactly that people want to know about ETA? We're actually pretty intentional about crafting a year and a lineup of events that sort of gives, every part of the journey its due course in terms of best practices, inspiring practitioners who we coax to come to campus, and some internal events where, as an example, Matthew and I gave a presentation about how to craft a unique thesis in a world where maybe it feels like certain ponds in search are becoming overfished.
What Dan and I find ourselves encouraging new club members, first year students to do is to walk into these Kellogg classes and picture yourself as a first year operator in a business that you could see yourself running. And it suddenly shifts the way you think about every class you're in. That revenue recognition accounting class becomes a lot less boring when you think about it through the lens of being an operator. A lot of the finance classes, when it comes to structuring and debt and tax shields, become a lot less boring. Kellogg alumni who have searched and had successful outcomes frequently cite courses like negotiations, the core strategy class, the core managing organizations class as pretty fundamental to their managerial styles and their success as operators. So I'd say that the curriculum is strong on that front. And the other thing I'd add is we've had the Zell Fellows program for more than a decade now at Kellogg, which is a entrepreneurship program with about 20 folks each year. About half of them are looking at starting a new venture and half going into some form of ETA. It's a program with a lot of structure, from executive coaching to mentors and residents, team building, bonding, improv classes for managerial leadership, you name it, but essentially a structured program to try to make you a strong young operator. And Kellogg invests quite a bit of time, effort, and funds into that program in a way that most Zell Fellows of years past have found to be greatly beneficial.
One interesting thing about business school, and certainly what I know about Kellogg and speaking to you two, is that there's often quite a bit of overlap between being in the program and preparing for what you want to do next. Can you talk about being in the Kellogg program, but also with an eye towards immediately hitting the ground running once you get out of Kellogg?
What we see a lot of students do that's almost table stakes in search is internships with searchers during the school year and with investors and operators during the summer between their first and second year. So there's benefits to having a strong alumni base in the search community, because a lot of the people you may intern for during the school year are Kellogg alumni, or in some cases Booth alumni, who are not too far away. Those internships are often 10 to 15 hours a week, helping first and second year searchers on the sourcing side of the house, and getting to understand how to leverage a strong tech stack, run email campaigns, cold calling efforts, figuring out which conferences you should be attending. Kellogg is more than happy to provide course credit for those kinds of internships. And then during the summer, we see a lot of the larger investors especially recruit students to do hybrid internships where you may spend 2, 3, or 4 weeks with an investor, sitting alongside them, seeing what searchers are bringing to the table, working on your own independent thesis development, and trying to get a head start on that front while getting to know your investors on a deeper level. And then spending the rest of your summer, 7 or 8 weeks, interning with an operating company. Dan and I both did that this summer and got a lot of great experience doing so. And it was confirmatory in our desire to to take on the CEO role at a small business, eyes wide open, seeing, what a 29 or 30-year-old CEO's day in, day out life looks like.
I think as folks get closer to actually launching their search fund, there's probably two major categories of activity parallel to the curriculum. One of those very, very pragmatic, but it's fundraising. Matthew and I are both heading down the traditional search route that involves networking with and hopefully receiving investment from the investors that we want to partner with. And the second thing is when you have that .edu email address and you have the access to the fancy trade pubs and the Wallers and the Ibis world, people will respond to your email at a much higher rate. If you say, hey, how's it going? My name is Daniel. I'm a second year MBA student. And I've really been tracing this trend in your industry and I'd love to get your firsthand perspective on it. And that's opened a lot of doors for both myself and Matthew as we start to work on getting smart on the verticals that we anticipate potential opportunity in.
So we know that ETA is becoming more and more popular among MBA students. And of course, it's gaining greater and greater awareness among investors, a lot of high net worth investors and family offices. What kind of emails are you two getting, even though you're still in the MBA program, that you think is indicative of this level of interest from the broader network, people who might put capital into a search fund?
The day that Daniel and I put our faces and emails on the ETA at Kellogg website, our traffic definitely increased. What we see a lot of is folks wanting to come to campus. That's everyone from investors to service providers. And that investor universe, like you said, is family offices who have been investing in search since the 90s. There are a lot of institutional funds that have started up in the last 3 or 4 years, really raising based on the fundamental returns that the broader space has seen over the last couple of decades. Those folks are all really valuable resources, frankly, for people considering search to get a really strong understanding of what the process of buying a business is going to look like and to make a more informed decision on which investors they'd like to have in their cap table and who they'd like to prioritize when it comes to board seats potentially down the road. We try to limit the number of events we have on campus to about 2 a week, but had a couple weeks this quarter where we actually had 3 or 4 groups coming to campus, which is, I think, a good illustration of just how much interest there is.
How would you characterize the supply demand of capital looking for ETA opportunities and qualified or at least enthusiastic searchers who want to provide those opportunities? What does it look like right now?
Yeah, so I'd characterize the ETA ecosystem as a 3-sided network. One side is business owners who are approaching retirement age with no succession plan. Another component of the network is the capital. And the other side is the entrepreneurs that want to go do this and take this path. The capital is expanding the fastest. Closely following is the enthusiasm and ambition and volume of entrepreneurs, both inside the MBA ecosystem and outside. What's remained relatively constant is the number of unique business opportunities.
ETA, at least to date, has a relatively higher failure rate than some other forms of investing. And by failure, that could be defined as within a 2-year period, maybe you just don't find a business that's a good fit, or perhaps you do find a business, you run it, and it becomes kind of a long road to a small place, notwithstanding all the fun that you have along the way. So what do you think that the embrace of that kind of risk says about the kind of people who are attracted to ETA, and how do you think they think about it, and how do you two think about it?
Most of the people who are really interested in doing this and who get a lot of interest from investors, they are solving for the fun along the way. And there tends to be a high correlation between getting to enjoy that fun along the way and having stronger or outsized returns. When it comes to not finding a business at all, I think there's 2 camps there. We see a lot of people who search for 2 years, don't find anything, but learn a lot about themselves and how to go about selling themselves and maybe get close on a couple of deals and gain pretty relevant experience. But most of those folks end up in a good position at some point. Either their investors make an introduction that helps them get a job at, say, a search-backed business, or they wind up working in the investor community as maybe an associate or vice president helping out with evaluating opportunities. and riding shotgun on deals and diligence, the journey is worth it, and it has to feel that way to be willing to take this risk. What I think Daniel and I are trying to do as club co-presidents at Kellogg is to make sure that everyone realizes that those risks are there. The process of sourcing is one that involves a lot of day in, day out failure and rejection, and that you have to be prepared for that and prepared to really sell yourself. And this idea of being able to buy a business without a committed fund behind you to people who are going to be judging you pretty heavily when it comes to these business owners. The odds of finding capital coming out of a business school like Kellogg today is high. You'll likely, as long as you buy into everything the school has to offer, be able to raise a search fund. And so you have to think about, all right, if I can raise the capital, do I personally feel confident that I can find the business and run the business as well?
It sure feels like over the last couple decades, MBA students' attitude toward entrepreneurship and risk has really shifted. Man, if I had to compare search fund entrepreneurship to, say, startup entrepreneurship, where I actually have some practical experience, the search fund thing actually feels way less risky to me. The dispersion of outcomes is way narrower. Back in 2015, I might underwrite our chances of finding a deal at 70%. I think it's materially lower than that today. But even so, I mean, I would gladly take that roll of the dice for the opportunity to have the autonomy, the impact, and the working relationships with the investors and peers and mentors in the ecosystem that just feel like such a huge unlock for me in sort of my forward trajectory in life fulfillment.
The story you constantly hear is that when somebody finds a business, closes on that business, and operates with a high level of integrity and character, even in the event that the business doesn't do well, which presumably at that point is related to macroeconomic trends or underwriting risks that weren't foreseen, the investor community likes to welcome those people with open arms to either get another shot on goal as a searcher again, or to find another role within the community because of the fact that they've been through that full rep start to finish, even if it didn't necessarily go well.
Excellent. Well, Matthew Conley and Daniel Lazier, thank you so much for sharing your perspective with Search Party. Good luck, and I hope we can check back in with you as your ETA journey continues.
Yeah, thank you so much. It was a great party.
Search Party is sponsored by Avid Bank, Boulay, Mayer Brown, and Plexus Capital. The lead sponsor is Next Coast Legacy.